Today we're talking about tax proposals from the House Ways and Means Committee, and some things that they came up with are going to potentially cause you to pay more in taxes. So one of them is a 3% surtax on incomes, but only if you're over $5 million. So if you're one of those fortunate few that has an income over $5 million, if this passes, you'd have to pay an extra 3% tax on top of the 39.6%, which is what's in that proposal. Then there would be net investment income tax. This is not new. This is when you're over $200,000 single, $250,000 of income married, you have to pay an extra 3.8% tax on passive income. Interest, dividends, capital gains, rental income. Now what this proposal says is that if your income is over $400,000 single, and I think it's $500,000 married, then you'd have to pay that 3.8% on active business income. So that would be new. And then finally, there would be new income limits on qualified business income, QBI. So this is when you have a business or rental property that's profitable. The IRS right now says you can deduct up to 20% of your profits against the profits to reduce your taxable income. That would be completely phased out regardless of whether you're a service business or a non-service business with this proposal. So to further clarify, so that passive income, these are investments that you're really not actively involved with, interest, dividends, capital gains by definition, generally, and businesses. If you own part of a business but you're not actively involved in it, that's passive. Active is when you are actively involved in the business, like maybe it's your business and you're working in that business. Anyway, that's the potential change that you would have to pay net investment income at higher income levels. At Pure Financial, we have advisors that are ready to talk to you about taxes, and I love to talk about taxes, and so do they, but we all hate to pay taxes. That's why we have a free tax reduction analysis, and you can schedule your appointment right online.